Hi, Grant Cardone here with my non-negotiable money tips. You will live by them. These are 15 tips that I have used over the last 45 years to create the wealth that I have. Keep in mind that I started with no money, no contacts, and no debt. I built several very successful businesses, and these 15 money tips that I am going to share with you right now are hard and cruel, and will make you feel hard. But if you follow them, I promise you will create wealth for yourself. Let's get started, but before, subscribe to Open Economics for more money tips. 1. Never spend more than you make. I've been doing this since I was 25 years old. If I don't have it, I don't spend it. If I make $2,000, I don't spend more than $2,000. Never spend more than you make and never count it until you have it. Just because you made a big sale doesn't mean the money is in your hands. Don't spend that money and don't get blinded. 2. If you can't deduct it, don't buy it. These rules are for those who are starting out. Once you create wealth and you're super rich and you've made it, you have the Elon Warren Buffett's money. Do whatever you want. But this is for those who are starting out. If you can't deduct it, don't buy it. For example, if you look at cars, anything that weighs more than about 700 kilograms, you can deduct it, or I would deduct it and pay cash for it. I wouldn't lease it if I can't deduct it this year. Let's say you are buying something smaller that weighs between 3,000 and 4,000 kilograms, and maybe it's just a small pickup truck. Then I would lease it for 24 months because I can deduct more on a lease than if I just owned it. 3. Know your living costs. Knowing exactly how much your lifestyle costs amazes me. How many people have no idea how much money they make, how much they pay in taxes, how much they pay in mortgage, how much they pay in car payments, electricity, water, utilities, how much they spend on their kids, eating out at Chipotle, Uber, etc. If you don't know, you can't control what you're doing. So the first thing you should do is know exactly what every penny your kids get goes towards, what your wife spends, on what you spend, how much your gas costs you, how much your oil costs, your tires. Calculate everything. If you just take the last 90 days and go through your checkbook and your credit cards and add it all up, you'll get your cost of living live. Divide that by 3, and that's the monthly cost of your lifestyle. You need to know down to the last cent. Know exactly how much you cost to live so you can start to control it. And secondly, get over it. 4. Never lend money to anyone. Listen to me. You are not a bank. You are not an ATM. You are not a credit card. Your name is not MasterCard. It is I need to earn money. I need to take care of my family. I need to take care of my business. I need to build my wealth. And not even then would you lend money to anyone, especially friends and family, so don't do it. I'm telling you seriously, it will not solve their money problems. All you will do is get yourself into their financial problems. I have never done this. I've only done it once in literally 30 years. And on that occasion I was disappointed. Never lend money to anyone if they cannot get it from a bank. They should not be able to get it from you. 5. If it doesn't generate cash flow, I say no. That you don't invest only in assets that generate cash flow. At this point I get a lot of hate for this, because that would exclude buying a house. Yes, you would not buy a house because the house does not generate cash flow. When you buy a house with a 30-year mortgage, you are the one who generates cash flow. The house does not generate cash flow. That is why I say at the beginning, invest in things that generate cash flow instead of buying a car that does not generate cash flow, because you don't buy a car that you can rent out to the world, and so it would generate cash flow. Then I would say yes. Buy the car do you want to buy. A 4-unit house that generates cash flow and live in one of the units for free generates cash flow. Do you want to live in a house that you have to feed and pay a mortgage, interest, maintenance, property taxes, and realtor fees? Don't do it. Doesn't generate cash flow. If it doesn't generate cash flow, I say no, and end of the story. 6. Never bet with money. Unless you are sure you are going to win, luck may smile from tonight, but don't bet with money. Stop betting on the stock market. Stop betting on NFT. Stop betting on cryptocurrencies. Stop going to casinos. Don't put a coin in a rewards machine, or it's just a coin. Look, if it's just a coin, you will never get rich. If you ever use the words just or not, it is long before any financial amount. You will never end up having money because you are not treating it. Seriously, never gamble with your money. Never gamble with my money. Just don't gamble, period. 7. Limit your expenses to passive income. Passive income. This means that discretionary expenses are those that you absolutely don't need. You don't have to have them. They are things that are on a scale of 1 to 5. Maybe they are a 3, 4, or 5. The 1 and 2. You don't need to do. The 3, maybe. The 4, you don't need. The 5. They are stupid. Discretionary spending should only be done with passive income. Passive income is not the income I got in exchange for time, but the investment in something that keeps paying me. Passive income is not the income I got in exchange for time, but the investment in something that keeps paying me only. In this case, I will buy the yacht trip, the watch, the bracelet, the necklace, with the passive income generated by an investment generated by the exchange of time. 8. Pay the credit cards every 30 days. Credit cards should be paid off every month, it's worth mentioning that. Visa, MasterCard, Express are good for one thing. They are like my free little accounting program. I use my credit card for everything, so I can keep track of my spending. At the end of 30 days, I pay it off. I don't know how many years it's been since I've had credit cards, but I bet you that the total amount of interest I have paid to American Express, Visa, and MasterCard, on which millions of dollars have been spent, is no more than $1,000 in 40 years, believe it or not. This is because I pay everything. The only time we pay interest is when someone forgets to pay in the first 30 days, but that is a rarity. Pay your credit cards every month, don't throw them away or cut them in half. As Dad told you, you really need credit cards. I use them to stay in good standing when I go to a restaurant. I pay with a credit card, not cash. You don't want to have cash because it gets lost. It depreciates and you overspend. Use your credit card, and at the end of the month, make sure you pay it off. This also becomes a reporting system for me. At the end of the year, I don't need to send a bunch of receipts to the IRS to show my expenses. I have my Visa and MasterCard to do those reports for me. Pay your credit cards every month and never break that rule. 9. Rent instead of buy. Lease and rent until you have lots of money, until you are super rich, I tell you. Rent it and lease it, don't buy it. It doesn't need to be owned, use it. Use the rental car. Use all you can without the obligation to own it. Don't commit to a 20 or 30-year mortgage or a 7-year loan. If you can just do a 24-month lease for a piece of equipment, it is much better. Look at all the Wells Fargo banks. They don't own any real estate, of course. They don't own any property either. Most of these companies don't own, they lease. JP Morgan leases most of the properties they own in New York City. Who do you think you are competing with? I own a building at home. Why do you think like that? Lease and rent until you have massive wealth, and even then you might want to keep leasing. 10. Stop buying stuff. Stop collecting stuff and start collecting assets. This is a game of assets, not bracelets. You have your watches and necklaces and all your gold and glitter you are collecting, and I am collecting assets. I'm investing in real estate that generates cash flow, while you are buying bracelets that break. So acquire assets, not things, plus for your children. Stop buying them toys and start setting up real estate trusts for them. Because they are going to outgrow their toys, plastic things, and they are going to grow up having assets that have increased in value and have provided them with income. As you wait for this, it will give you and your family appreciation and depreciation. So when your children are 15, 16, 17, and 18 years old, they will not have things from their childhood but assets because you made the right decisions when they were children. 11. Don't allow allowances. Stop paying your kids allowances. It's okay, your kids don't deserve an allowance. They deserve a chance to work for you and then pay them. My kids have never received allowances in their life. I don't even know if they know what the word allowance means. They work and we pay them. We have a contract with both kids. Once a year we pay them, and then, according to the contract, they have to fulfill a certain amount of chores and duties for that money to be valid on the contract. That money is tax deductible for me. I can deduct it. They get a form. Basically an amount of $10.99 at the end of the year. They are responsible for their taxes. I take the $30,000 that we pay Sabrina or Scarlett, my daughters. That's what they earn. We invest that $30,000 in a vehicle that I control. Every month they have a distribution or cash flow. Let's say that cash flow is $150 a month in an amount of $30,000. A year they earn $1,800. And the 150 pesos a month is what they live on. In the second year they get another $30,000. Now their $1,800 becomes $360 a month. In the third year they have $120,000 or $90,000 invested, and now they earn $500 a month. Do you follow me? Over a period of 10 years they will end up with $300,000, $400,000 or $500,000 invested, because if they improve in their work, they will never improve with an allowance. Nobody improves because they get an allowance. You improve because you work. I'm teaching my children how to work with money, how to control their assets, how to control their capital and never use it or touch it. And I'm showing them the long-term value of how money appreciates when you invest it, and they have to learn how to manage cash flow. A 6-year-old, they shouldn't get $30,000. They should get maybe $150 and tell them, do whatever you want with this money. Live off your passive income, never touch your capital. Stop paying your kids allowances. Pay them for working. It can be taking out the garbage. It can be giving you hugs. If I say, that hug feels so good, boom, I'm going to pay you $30,000 a year, but I need at least 10 hugs a day. Teach a kid how to hug, teach them how to love, teach them how to work. 12. Never mix accounts. Never mix business accounts with personal accounts. Never mix these accounts. When I use a credit card, the Express, it can be the business card and Visa. It can be my personal card, so at the end of the year or in an audit, the IRS will say, because this was for business, everything on this card is for business and everything here is personal, but never mix these two accounts. Don't mix personal with business. When I take it out of business, I put it in my personal account. I don't take my personal account and dump it back into my business. 13. Keep separate accounts. Even when you are married, those who are just living together should definitely keep separate accounts. There is no reason to mix your accounts. Even when you get married, there is no reason to do it. Each person should be responsible for themselves. You have this amount of money, I have this amount of money. If you are sharing business money or sharing how you pay for things, have separate accounts. My wife and I have separate accounts. It's not because I don't trust her. It's because I do trust her. I trust her to grow her money and look at it. We take care of things. We know how to divide things, but we have separate accounts. This will also protect those who live with someone irresponsible, and we know that happens in some cases. One person is very responsible and the other one is not. Pay attention. When you have separate accounts, both people must pay attention. Sooner or later, the irresponsible person will run out of money in their account, and the other person, the responsible one, will be the healthy partner. And what you want to find out in those situations is who is healthy, who needs to be corrected, who needs to be held accountable. 14. No show, no follow. If you're doing business with someone and they don't want to talk about their finances, run as fast as you can. If you're going to do business with someone, invest money in someone's business, invest money in a project, invest money in real estate, and they don't show you what their personal finances look like, their business finances, but they show you their bank accounts, their bankruptcy history, their cash accounts, their investment accounts, their income. If they don't show you this, I say, run and do it as fast as you can. The IRS, they know everything you already have, so don't be fooled if they tell you, I can't share that, it's personal. Why can't you share it? If you want to do business with me, share it with me. Where you have your money. If you're going to apply for a loan, the bank will know everything about that person. They will know all the little details, whether it's spending problems, spending habits. You guys who are starting relationships with people, ladies, before you go to bed with someone, find out what their financial situation is. If they don't show you, move on. 15. Avoid people with financial problems. Avoid all people who have financial problems. Run away from them like the plague. They have a problem and that problem is contagious. Their financial problems will become your financial problems. Let them work it out if they can, and then come back, and I know what you will tell me. You will say, Grant, for you, it's all about the money. That's why it's called non-negotiable money advice. It's about money. I'm staying away from people who have financial problems. If I'm a true friend of yours and I'm going through problems right now, why would I want to bring my problems to you? Stay away from people who have financial problems. These are my non-negotiable money tips. Look, for you, out of nowhere. If you don't know who I am, I literally started with nothing. At 25 years old, I had no money, I had no credit, I had no finances, I had no mentor. There was no training or education about money. I knew nothing about it. I only knew one thing. I wanted it, and I knew I wanted more than I had. So I started studying and reading all the books I could about finance. All these rich people I met. This book, The Millionaire Next Door. $1 million is not enough money for you. It's not enough money for your future. It's not enough money for your security. And it's definitely not enough money for retirement. These money tips have put me in a position over the last 30 years to really study the money game. How much I need, how to account for it, who I do business with, how to create real wealth, how to create passive income, how to avoid the tax man so I can take care of the people around me. Not handouts, but to take care of myself and the people around me and provide stability for other people. Money will not make you happy, but it will pay for everything. If you want more money, follow these money tips, and I promise you that if you stay disciplined, if you make them a code for you and your family, I promise you that you will create the wealth you deserve. Here we leave you another video of value in open economics. Remember, if you like this video, give a like and subscribe, so you do not miss any of our videos. Until next time.